and then me waiting for this particular city. This is it. Retracement into the city and then sell-ups. That was the premise on Tuesday. Going to the 1 hour now. Going into the 1 hour. This would have been it. I'll show you the pathway for that now. The market started gravitating. Let's pick it from here. Retrace, then move up, retrace, then run all the way, then market structure shift. Immediately this market structure shift, I'll expect a retracement and then the sell. So that was the whole premise. Looking at it very well, that was the whole premise. That was everything I was actually planning for. So I took a trade here. I took a trade inside this. Going to the 5 minutes, I'm going to show you a particular trade. Although I took a trade, I didn't wait for much more. Yeah, it happens to me too. I sometimes get too impatient. Immediately the market structure shifted here. You remember the 1 hour, all that, and then fell off. Immediately this happened. The very first thing that became my target was we are going to see here this sell side liquidity will get purged. That was what first became my target, and then overall, although I didn't expect that we just shoot straight for here, I didn't expect it. So that was why I said I took it a bit early. I only waited for this, and after getting this, I left. So the retracement leg, this was it. Retracement leg, if you put your fib on it to find out the average, you see that this retracement leg was inside premium. So that's it. That fulfilled it. This equilibrium. So we enter premium. This is it. We are in premium as of this point. This whole retracement leg. So with that being said, all I expected was okay. We have entered premium. I expected us to start gravitating downwards. And start gravitating downwards, all this BCA, I expected it all to be invalidated. They will never be valid for the premise. And since they'll never be valid for the premise, immediately I saw this particular displacement. First, seeing that particular displacement, this became my anchor. This is a breaker. This particular red candle, believe it or you like, this is a breaker. 1. After that, there is a particular CBS. Look at how everything is, how the confluence came to be. This breaker with this particular CBA. All of this. Ping. You could ping it here with your stop loss here. I didn't take my trade here. I saw this, so I didn't take my trade here. It's not for me to start telling you, oh, I took the trade at the perfect point. This would have been a perfect point, but I didn't take my trade there. I took my trade solely based on this. They invalidated this particular fair value gap. After invalidating it, I took it based on this particular order block. Very short order block. They fell all the way down. They retraced back into it. I think they trade there. My stop loss was still somewhere around there for this. I'd be like, oh, why not place your stop loss here? There are times when they can want to test this again and then fell off. So that's why I was still tagged there. But immediately they start gravitating, I started shifting it and readjusting it and adjusting it till we got here. So you might be like, oh, the RR is small, the RR is this, is that. But it's a win. At least the RR is 1.56 here. 6 for 10.30, 6.6 for 10.30. So immediately I got that, I was done. Why was I done? The reason why I was done with that trade was when it was the previous day low, which is a realistic target. If you're expecting short sell-offs for the week, you can keep targeting previous days low and you'll never be far off. You'll never be far off, and you'll be so surprised that there are plethora of trades that go to that. You just take that, you might be done. You don't have to look for the extension move. How to. You can just be satisfied taking that and give yourself that peace of mind. All these retracement, I can put with Fibonacci to calculate why all these have to spread all going up to here. So just this is what you're getting for now. This day low, this previous day low, Monday's low, we got it, tagged it and backed it. Immediately we tagged it and backed it. That was it. That was done. So since that was done, I still brought out my arms bowl, let me call it that, because I was looking for hope. Tuesday we didn't run all the way down yet till market closed. So definitely Wednesday, I was expecting this. So all this particular run up, all these bullish things, they weren't in my mind to take trades or longs. If my week is showing me we are targeting a particular liquidity point, why will I be looking for longs? Especially if my week is showing me we are targeting a sell side liquidity there. It does not make sense for me to be looking for longs. That's what I'm trying to teach you. That's what I'm trying to teach you, to explain to you. Just follow your weekly profile. Follow what the week wants to do. Follow what your daily profile wants to do. Simple, and then you'll never be far off. And then if you're far off, you can always readjust and see things how it should be. So Wednesday, I brought out my arms board again, and I was expecting, okay, let's see this particular will get wiped out. Let's see this particular will get wiped out. And so 2 o'clock, we saw a heavy delivery to the downside. And then 3, the market opened at 3 to the continuation of that heavy delivery. I was expecting it. So immediately I saw every 2 o'clock, I was thinking, oh, most likely we are going to just race up to that. And then since I was expecting racing up to that on Wednesday, and I was expecting that racing up the course to that on Wednesday. After to get delivered, I couldn't pick anything up from 2 to 3, all of that. So when we now missed this, when we saw this, when I saw that we missed this, we didn't get up to that liquidity point, and then we start gravitating upward. This doesn't mean support and resistance bullshit where, oh, they have gotten to that same point, that's the support, and then you start looking for longs. No. You see all of this and then they come and claim you out here. So I was just watching and waiting on my ass for them to get all the way. I was seeing how they were going to react here. If they had invalidated this, I would have been expecting maybe somewhere. But as they have it, they didn't invalidate that. They just got here into this CB. Getting to this CB, I looked at this BC. While I was looking at this BC, immediately they got to this CB and then they start falling up. This BC, I was looking at it to become an IFVG. Inverted fair value gap, IFVG. Immediately I was expecting, immediately they got inside and then they start falling up. I was expecting this to turn into an IFVG. So, and was my hand note, that is, the candle that forms the fair value gap, the low, if it's a PC, the low of that candle must be taken out. If it's a CB, the high of that candle. So this is a PC. So the low, immediately they gravitated all the way into the low. You can place plethora of trades in here. You can place plethora of trade in here. This particular red candle is also a breaker. You can place your trade on that, on the low of that candle. Place your trades on that breaker exactly. You can place it there and then gravitation down. That's it. That's it. There is no inclination there. And then even if you want to really fine tune this, there's still another opportunity of placing one here. That's it. Oh, I feel, oh, it's so small. Your stop loss will be here. These last two green candles, bullish candles, they are very short of block. So going down, retracing back to it into a fair value gap, a CB fair value gap, supporting that same premise, and then coming to slam that sell side liquidity on the weekly profile. Coming to slam it, I was done. Why was I done? We have gotten to our weekly profile. We have already taken liquidity out. Now, It's a double-edged sword in the sense that what would make me enter the market again and what made me actually look at things again. Because if you have been seeing the way I was scrolling, there was one particular thing that I drew on Thursday that I was watching for. What would make me enter the market the next day would have been the dollar. And so going back to the dollar, going back to what the dollar did on Thursday, looking at it, we haven't got into this buy side liquidity that we have been targeting for the dollar. Let me wipe this off. I haven't got into the buy side liquidity that we are targeting on the dollar. And since we haven't got in there, and then I saw this fair value gap building up. In my mind, I was like, okay, if the dollar decides to go on a straight shot, then most likely they won't come in. But if they decide to retrace into this, I'll be looking for a trade on Thursday, Friday. Thursday, when the dollar is retracing into this, I'll be looking for a long trade on the euro. And Friday, I'll be looking for a short trade on the euro because I had the idea that if they retrace into this, they shouldn't invalidate this fair value gap. And if they don't invalidate it, then definitely they are going to come out from it and still go for this and still keep trying to navigate and take out this buy side liquidity here. So immediately I was thinking to this, but I was given the premise that okay, they might want to shoot up. But immediately they started giving up the ghost. My eyes were strong here. This particular point from here to here, this particular point. I was drawn to that. I want to see how they react inside here. With the premise that even if they go lower than that box, you shouldn't be seeing them going lower than, sorry, shouldn't be seeing them going lower than this. So since that was your premise and that was everything in it, I had to start looking at the euro. Immediately I started looking at the euro. During the sense that if you look at this particular same price point, this particular price point is a CBA. There's a small CB there. I think of it that low is too small, is this, is that. There's a small CB over there. This is on daily chart. There's a small CB over there. And since there's a small CB there, I was expecting, okay, let them gravitate into this CB without doing what? Without taking out this particular, yeah. Let them gravitate into this CB without taking out this particular. That was all I was expecting. So Thursday, when the dollar started falling and then the euro started gravitating into this, I was expecting this CB. So that was why you are going to see it when I get to the lower time frame. That was what I was watching out. And I took like a bullish, I saw a bullish apparatus here. Let me just call it apparatus. But I didn't like what they did on Friday, thinking that messes up with my psyche a bit. Because I wouldn't have expected that, but it is what it is. So going to the 4-hour chart for the euro. Immediately they've taken out this particular fair value gap here and paint it out. Let me paint everything out so you see what I'm saying. This particular leg, this pathway, then when this retracement pathway, that's why I don't really like it very much. Let me clear everything up first. This particular pathway, sorry guys, this is taking way more than actually want, but I love having any chat. So join the pathway, this retracement leg, and then the more sellers, then this slight retracement for the more seller. Then them doing this, I got pinged about me being actually expecting the dollar going down and then the euro going up on Thursday. So the reasoning being, if you had actually wanted to see more lows on the euro, I would have expected us to come inside this particular CB, not take out this candle that anchors the CB, not take out the high of this candle that anchors the CB, not take it out. Let's not go above it, not take it out. Just retrace into this CB and then follow. If we are going to see a stronger dollar and a weak Euro USD on Thursday, but immediately we started gravitating to that and they took that out. Immediately they took that out, I was pinged that okay, we most likely want to go up for more. Why would we most likely want to go up for more? Because the dollar itself hasn't gotten to that point that I was watching out for. And obviously that would have been it on Tuesday £4. Then they did this particular dodgy candle. So Wednesday, if you are still looking for this, the Wednesday would have been straight. Let's see another low, the previous day low. Going by Wednesday, would I have seen another opportunity? I just did back testing. Wednesday, yes, they would have seen another opportunity in the sense that after they did all that, they haven't gotten to the objective. All this is a retracement leg from here to here now. This is a retracement leg and then another displacement. These last two candles, that's my words. My very shorter block. These last two candles, my very shorter block. They retrace all into it and then give up the ghost. So they gave up the ghost. That have been my first point of call. Very shorter block, giving up the ghost. Retracement into this. You could have taken a trade here for sellers. Look at this. They didn't get up to this objective. They didn't get, yeah, just seeing it that way. Let me open it up very well. You see that? They didn't take out that low. So they didn't take out this low, which is the sell side objective, and then this. So, and they start trying to gravitate upward. Obviously, this is not support and resistance. This is not a support zone. This is just to trick people into thinking this is support and then they start going up and then people start placing orders here. No. All they did retrace into this particular city. I would have even loved it if they retrace to get here and then drop down. But I can't always have everything I want. So they retrace into this city and then more drop off to take out the objective. Immediately they took out the objective, that's fine. That's been done for the week. That's been done. And then obviously Thursday, you could have seen something that could have given you a trade for Thursday and then Friday. So that's it on the pound. So that's a weekly breakdown. That's everything we saw in the previous trading week. The pitfalls, the moments I had to realign my buyers for the week. That's everything. So see you next time, folks. Have a good day.